So let me
Hello,
start.
what pay me see my shake with you?
It's nice to hear from all of you again, and thank you all very much for the wishes the last time. I really appreciate. So we are here again today. We are here again today to continue from where we stopped. So please, if your mic is not muted, please can you mute your mic? Try to mute all. Okay, I think all is muted now. So we can have a peaceful class. So thank you all for joining. If
you've not started sharing your screen.
It is shown.
Okay. Oh, we are still seeing your.
Yes, it's just my desktop. Nothing is here yet. So I said if you are new to my class, let me open a pack, even though that is not what we are doing, but so you'll be seeing something. So if you are new to my class, my name is Sulaiman Olanshile Omogbola. People say I should be adding ACA. But I'll be adding it. Sulaiman Olanshile Omogbola ACA. And I've been taking SFM and I'm still taking SFM. I think we've done about 3 chapters. We did introduction to SFM, we've done treasury. I've done all those introductions in our last class. I don't think I need to go through those introductions again because we need to move as fast as possible today. Please don't mind what is on my screen. I'm just displaying this. This is not what we are doing now.
Hello, Mr. Agbola.
Yes, ma'am.
Please, I beg in the name of God. Let there be decorum today. I used to fall asleep anytime they are talking. I will not understand anything again.
No problem, ma'am.
Please, sir.
No problem, ma'am. Thank you very much, ma'am. So, like I said, please don't mind what's on my screen. I'm just trying to display this so it's not look like it's empty. This is not what we are doing today. So, let's move on ASAP. We have a lot. I need to finish bond today. We use like 3 classes on bond. It's happening. So I need to finish my bond valuation today. If there's still time, probably pick sources of finance. I think you're supposed to start cost of capital this week. So you might not hear from me for a while, but I don't know. Let's do what we have to do today. So like I always do, let me do a brief recap on our last class. So last class, if you were not here, you can message anybody on the group chat that was there. Please collect the materials that we used. Check the YouTube for the videos.
Hello, good evening. Sorry, I'm interrupting. Please, for subsequent classes, can we have maybe at the end of this class, you say the next topic that will be coming up. So some persons have
So
time.
I'm not the only lecturer. So the topics cannot be splitted. It depends on the person coming.
Okay. All right.
Depends on what the
Right,
next lecturer is taking. I'm very sorry, please. You can just try to raise up your hand, then I'll probably call you to speak to avoid breaking transmission. I've forgotten what I was trying to say. Okay, I think I was trying to do a recap of what we did in our last class. So please, you can just raise up your hand in the comment section. I'll pick it, then I'll call you, then you can talk, please. So to avoid breaking, if you allow everybody to start talking, now we have 100 participants here. The class will not flow well. So a brief recap on what we did in our last class. I think last class we spoke about how to calculate the current price of a bond. That was the first thing we did. So we're trying to calculate the current price of redeemable and irredeemable bond. So for the redeemable bond, I gave you a formula where I said the value of the current price of redeemable bond is interest over yield. And I gave an example on that. Then I also gave, we also calculated the value of irredeemable bond where I dropped an example too. And there was one we did that we used formula method and we used tabular method. The tabular method was the one that I said that you will not do initial outlay, if you can remember vividly. You will not do initial outlay because you are trying to calculate the current value of the bond, and the initial outlay is the current price. So you not do initial outlay, you just do your normal MPV without the initial outlay, if you can remember. Very well. So we did that. I gave a classwork where we had like three different yield when we're doing the bond valuation using yield curve. I'm sure we can all relate to what I'm saying because we're all in the last class. Bond valuation using yield curve, where I give the formula where I spoke about compounding, discounting, where I said the formula for bond valuation using yield curve, you do your PV equals, if you have three different yields, if you have different yield values, where you do CF, your cash flow over 1 plus R year 1, your cash flow for year 2 over 1 plus R year 2, you do your cash flow for year 3, and so on and so forth. And in the last year, you add your cash flow plus your fair value, your par value, your nominal value, anyone you want to call it. I think we spoke about all this. Then we solved, I think we solved an example. I've forgotten the name I used, but I'm sure I used one name where we had, I think we had about like 4 different yield. We had 3.5, 4.0, 4.7, 5.5. And I think we all solved it together and we got an answer. Then I think we had 5. For our yield to maturity, we had 5.46. I think that was our agreement that we had. Then for our bond price, we had 98 naira. Am I correct?
Yes, you're correct. Yes.
Thank you very much, sir. And I give an assignment, please. Some people submitted the assignment to me. I thank everybody that submitted, but please let me apologize. I could not go through all those assignments. It was a really, really tough week for me. So I could not really go through all of them. So me being a very nice person. So what I said I would do is, I think I replied to some people, but I could not point out, I pointed out some people's mistakes. Some people had decimal mistakes. Some people had rounding up mistakes. I think I pointed out some mistakes, but I could not really check everybody's answer. So what I would do is, I think the assignment was, it dealt with 3 bonds, bond A, bond B, bond C. So what I would do is, I will tell you the answer for the 3 bonds. Then I can solve bond A, because I know there's probably like going to be an issue with a part there. So I can solve bond A. Should I solve bond A or I should move on? Let me put it out. Should I solve bond A or I should move on?
Please solve bond A.
Okay, real quick. Let me run through the question again, then I'll solve bond A. So you use the solution for bond A to solve the remaining 2 questions. Then we'll talk about duration real quick. Duration should not take us anything less than like maybe more than 1 hour. But before I solve the question, let me still continue my brief recap. In still our last class, we spoke about credit rating. We spoke about basis points. We spoke about credit spread. And we did all those things in the word. We did everything in the class. We spoke about AAA bond rating. We spoke about AA bond rating. We spoke about A bond rating. We spoke about BBB, BB, and B. We spoke about CCC. We spoke about all those things in class. So I'm sure we know that we spoke about it. And I mentioned the determinant of credit rating, where I mentioned financial performance. I spoke about quality of management, the size of the company, the business risk, and the credit worthiness. We spoke about all those things. So before we go to duration real quick, let me solve bond A for us. Someone should read the question for me again. I don't think I have the question here anymore, but someone should read the question for me. So let me solve bond A real quick, then we'll move to duration. Can someone read the question for me? A very nice person. She helped my life. Don't have the question.
Okay, let me read it. A government has 3 bonds in issue.
Ma, please hold on, ma, please. Let me try to open my word. So I'll be taking down. You know the way we solve our stuffs now. So I'll be taking up derivatives.
Please, though, there was a question that we were solving in the last class, that we didn't complete. Modupe Limited. We didn't mention that.
I think we solved it now. Was that not the one that had 5.46?
No, sir, we didn't finish the Modupe Limited. We didn't finish it.
That was left. We didn't finish it. He asked us to finish it. So I got, I don't know whether the answers are correct. I think we were going to talk about it today.
So it was,
I got
okay, it was the one that
5.88
had,
and I got 97.24.
the credit rating and that had
Yes,
like 4
then
years.
you said you were going to do the duration when you teach us duration.
Yes, I think I can remember.
There were 3 requirements.
I think I spoke about the answer now, didn't I?
No, you didn't. You said we should finish it. So
Yes, sir. You didn't spoke about the answers.
Oh, no, this is real cool. Okay, what I'll do now is that but I already did the add part now. So what I will still I will rush through it, but let me finish that bond A, bond B first. Then I'll rush
the
through.
thing is, if we could tell you our answers, let's know whether it's correct or not, because I finished it. I don't know if it's correct or not. That's just what I wanted to know. Except
Okay.
if you want to.
Okay. Okay, let's do it like that. Let me look for the book I wrote. I think I solved it on that day too, but it was because of time. That was why we could not. Let me look for the answer on my jotter. Yeah. Okay. It was the one that we were merging that we had that credit risk now that we had basis point.
Yes.
Okay, please, what was the answer, please?
Okay, so for the price, I got 97.24.
And for the duration, I'll be for the youth maturity.
For the youth maturity, 5.88%.
You are very correct, ma. Any other person with any different answer?
Hello, sir.
Yes, sir.
Sir, for the issue price, I got the same value with what she just said, 97.24.
Okay.
Then, but for the yield to maturity, I got 6.4%.
I think you are wrong, sir. That's not a portion.
Sir,
That's not a population. I think you are wrong.
Sir.
I'm
Hello,
with you.
sir.
I'm with you.
Sir, please, sir. The yield to maturity. You said we should use IRR, Abi?
Yes,
and
sir.
then
Yes,
our
sir.
first IRR should be the coupon rate, right?
The first,
IRR percentage.
that's
Our
your discount factor.
Yes, the discount
Let's speak
factor.
like accountant.
Okay,
The discount
sorry.
factor.
Our
Yes,
discount factor should be the coupon rate, Abi, that's 5%.
Yes, sir.
So now, the second one that we're going to use
The 5%.
to
Hold on.
compare whether it's
Hold on. What did the 5% give you?
Sammy, I got
2.79. That's correct. Then the next discount factor that you used was what?
percent.
so the next discount factor, is it that is there a way to determine it, or we are just going to assume?
You assume. You definitely assume. That's IRR for you.
Okay, if we assume, then are we going to get the same answer?
I think I mentioned this in our last class. If you assume, you will not get the same. If you assume differently, that's how IRR works. You are not supposed to all get the same answer. But the
But
problem
you
is,
now saying somebody is wrong. That's why I'm trying to ask why this person is wrong.
listen to me, sir. I mentioned it in our last class that okay, your first discount factor, if you assume is 5. I said it particularly that this one you already have a positive NPV. So when you want to reduce the NPV, so you have to increase your discount factor. So if you increase your discount factor, I don't expect anybody to use 20% or 15%. I expect everybody to use 10%. That was what I said. That was what I expect. Everybody to just use 10%. That's the closest to 5%.
Sir, the mistake I had was I used 8% and I got the same negative value.
That is very fine. So that is very fine. But I just assumed everybody used 10%. But as you use 8%, it's still very fine. That is very correct.
That's what the differs.
Yeah, that is very correct. That is very correct.
Right. Thank you, sir.
You are very welcome, sir. So I assumed everybody used 10%, but if you did not use 10%, you are correct. Thank you very much for that correction. So I think I can move on from that now. I don't have plenty of time today. So let me talk about that bond A, bond B thing. Okay, I was trying to open my Word here. So I said someone should read the question for me. So I'll bring out my what's the name? My derivatives. Please, are we all here, please? Let's carry ourselves along.
Yeah, sir, we are with you, sir.
Okay.
Yeah,
So who was reading the question for me earlier? One fine woman was reading the question for me. She has gone away. Please, can someone else read it if she's not here?
I'm here.
Please read the question for me, ma'am.
A government has 3 bonds in issue as given below that all have a face or par value of $100 and are redeemable in 1 year.
Hold on, ma. So our par value is 100, yeah? I'm just doing bond A. Par value is 100. Please, let's mute ourselves. Please, let's have a peaceful class. Pass value is 100. Can continue, ma.
And are redeemable in 1 year.
Can we get this document? I don't know where you're reading questions from.
Respectively.
So our number of years.
They are redeemable in 1 year, 2 years, and 3 years, respectively.
1, 2, and 3.
The bonds are of the same risk class. Since they are all government bonds, it is also assumed that coupons are payable on an annual basis.
Okay.
Bond A, which is redeemable in a year's time, has a coupon.
Hold on, ma. I'm doing bond A now. So these are all the things I need for bond A. So bond A. Okay, I'm with you now.
Which is redeemable in 1 year's time, has a coupon rate of 7%.
Hold on, ma. Is redeemable in 1 year's time. So let me remove all this since I'm doing only bond A. So number of years for bond A is 1 year. 1 year. Okay. 1 year. I'm with you now.
Okay. 1 year's time and has a coupon rate of 7%.
So my coupon rate here now is 7%. 7%. Okay.
And is trading at $103.
So my power value. Okay, I already wrote 100 now. Yeah. Okay. Is what? So can you and is what?
Is trading at $103.
This question is an icon question. I think I mentioned it. Did I? That is an icon question. This is where the problem is. I said it in my last class. Don't streamline yourself to a particular. That's why you need to solve pathfinders. Don't streamline yourself to a particular kind of question. All the questions we've been solving, they've never given us the present value. But for this particular question, if you listen very well, they said it's trading at. They said you should just calculate the yield curve. So they did not tell you to calculate current the present value or anything, the current market price, just yield curve. That is what you need to calculate. Yeah. So they already gave you the present value that you need, because they said it is currently and it's trading at presently. It's trading at, this is your present value now at 103 per dollar. This is at premium now. Abi, my class mentioned it though. If it's higher than 100, it's at premium. If it's lower than 100, it's at discount. So yeah, it's trading at. So let's solve. We already have our. Please, am I? Anybody? Is there any question with this thing I wrote? Is there any question with this thing I wrote, please?
No.
Where can we get this question?
Which question is this? What year?
I don't know the year. I don't know. I just picked it from a book. But I think I snapped it and sent it to the group chat. I think I sent it to the group chat. You can pick it from the group chat. I'm very sure I sent it to the group chat. Blessing Kingsley, please hold on. Please let me finish the solution, please. So I sent the question to the group chat, sir. So you can check the group chat. You'll find it there. I'm very sure I sent it there. So when you are solving this question, like I said, I gave you the formula for this. I said, my class, you people are doing like we've not done this thing now. We said our PV was your cash flow for year 1 over your let's say one bracket, come here 1 plus R 1 plus R here now raised to power 1. Then you do plus cash flow of year 2 over 1 plus R raised to power year 2. Then on the last year, you do your cash flow plus your fair value. But there's a but with this question. You know that for this particular question now, our number of year is 1 year. So we don't need to do all of year. We don't need year 2, year 3, year 4. So we only do for year 1. So even at the end of that year 1, we are still going to be adding our fair value, our par value. We are going to be adding our par value to it plus our face value. Then 1 plus R raised to power 1. Please, is there any question with this formula? I gave us in our last class. So, is there any question with this formula? Before I continue, Blessing Kingsley, I can answer your question now. What do you want to say?
Can you just try the full formula you gave before so that the new people can follow before you start with this formula for this particular question, please?
I cannot. This particularly is the essence of the video that they dropped. I cannot keep going back. Time will be far spent. I'm very sorry, sir, but I already explained it. If you are new, formula for how to calculate current prices. This thing I wrote here, cash flow for year 1 over 1 plus R of year 1, 1 over 1 plus R year 1 plus cash flow for year 2 over 1 plus R of year 2 plus cash flow for year 3, the number of years you are doing. Then on the last year, you add that cash flow plus your face value. Face value of a bond is usually 100 naira. So you add 100 naira to that cash flow you've been discounting throughout the years. You add it to it, then you divide it by the 1 plus R raised to be the number of years. Thank you very much. So, sir, is there any question with this formula?
There's no question, sir, but I would have loved you to help us just send that question again to the group chat. To the platform.
That would definitely be after the class.
Thank you very much.
Sorry, it's still on the group chat. That's the WhatsApp group.
It's on the WhatsApp group now.
I have not seen it there because I joined recently.
Okay.
Okay, I will re-forward for you now.
Thank you very much.
Okay, let's do it. It seems a lot of people are just joining us. So let me do the favor. Let me write the full formula so we'll not be lost. Plus, this is, please, let's endeavor to watch that video before class. If you are just joining us, please, let's watch our previous videos. It will help. So we'll not be, we spent literally 3 weeks on bond valuation. How many weeks do you now want to spend on portfolio theory? We spent plenty of weeks on this now. It's not supposed to be. There's an online class that they started bond valuation that day and they finished it that day. It's not supposed to be. Plus, okay, no plus here. That face value. So I said cash flow for year 2 over you now open and close the brackets. You now do your 1 plus R raised to power 2 raised to power year 2. You do it for year 3. You do it for year 3 too. Then on the last year, you do it for year 3. If they say if the number of years is 4 years, you do year 1, year 2, year 3. Then on the last year, this is what you do. Sorry, excuse me. The last year, this is what you do. You do your cash flow. Let's say year 4. Let's say you're trying to do for year 4. Cash flow for year 4 over. You will now open and close your brackets. Sorry. You now come here and you now do 1 plus R. 1 plus R raised to power 4. And on that last year, now I mentioned that you add your power value, which is 100 naira. So you add your power value to it. Say I'm making a mistake with this my computer. I don't know what is wrong with it. Plus your face value here. So this is the right formula to. So on the last year, you add your face value, power value, nominal value. They are all the same thing. You add it to the cash flow for the last year, then you discount it like that. Please, is it clear? Please, is it clear?
Yes, it is clear, sir.
It's clear, sir.
Thank you very much. So let me continue my solving because I just want to solve for bond 1. So I said you now add on the because this particular question is saying the number of years is 1 year. So we'll add our face value to it. Face value to that year 1. So if you are solving, they already gave us our present value because they said it's trading at. So that is, please let's watch out for the questions very well before we if you know it, just try to reason before you start putting pen to paper. So our present value is 103 because they said it is currently trading at. So that is our present value. Our cash flow, like I said, okay, sorry, I did not do that because someone sent a question to me and made this particular mistake. And I don't know how I felt. I actually felt bad. because I mentioned it in class 101 times. Don't do your coupon. Don't use percentage for your coupon. Do not use percentage for your coupon. So the person used percentage and was getting 0.0000. That is what you get because you are using percentage. If you use it like this, you would have not gotten that. So we are this is 7%. You multiply this your coupon by 100 to get it in like an amount. So please stop. The person that is writing on my screen, please stop writing on my screen. Thank you. So what's our cash flow for year one? Somebody.
7 naira.
7 plus what are we adding to it? What are we adding to it, madam?
100.
7 plus 100. That's our power value, 100. It's also face value, the same thing. So let me just say 107. So that's 102. Okay, let me write 7 so I will not confuse the people that are just joining us. Let me just write 7 plus 100 over so we'll now say 1 plus what's our R?
Is unknown.
That's what we are looking for, which is our rate of return. I just wanted to put that out there. So our R, which is our rate of return, that is what we mean by yield. So that's what we are looking for. Shift year one. This is what we are. This is what we should have gotten. I feel like this is where the problem should have been. This is where the mathematics that we know. This is where it's supposed to now come. So what we do here now is next thing you do here now is you cross multiply. So
Hello.
So I mentioned it that you should please try to raise up your hand in the comment section. I would see it. So we'll not just distract the class. So I'm coming. I will answer you after just hold the question, please. So you cross multiply. Once you cross multiply here, what you now have is you have something like, this thing is 7 plus, this is 107 over. If you are writing it down, it's because of the way I'm writing it. If you're writing it down, 107 over 1 plus R. So if you cross multiply, now your 1 plus R now is standing alone. So you have your 1 plus. So you have your 1 plus R. Here now, raised to power 1 still. It will now be equal to, 107 over 103. Is there any question to this point? Is there any question to this point? So the person that
No. Okay, it's not a question actually. I just want you to kind of increase the font a bit.
Okay, sir. Okay, sir. I will do just that.
Then where you wrote 7% is equal to 7 times 100 is equal to 7. I'm confused there.
You are confused.
Sir, please check this cross multiplication.
I'm confused with the coupon rate side. Where you wrote 7 times 100 equals to 7.
Sir, please, I think
Can just put percentage beside 7.
Ma, have you ever been in our class? Yes, ma. Have you ever been in our class? So what is now the problem with the coupon?
7 times 100 is equal to 7. That's what I don't understand.
Literally, let me do it again. Sorry, I've cancelled what 107 over what did I say earlier? 103. Let me do it like this. What I explained with coupon, I said whenever you want to use your coupon rate, do not use coupon. Do not use coupon like this. Your coupon they gave you 7%. So you need to convert 7% to 7 naira. So if you want to convert this thing to naira, it's 7% now. So if you do 7%, let's say Ma, are you still confused?
Not at all. It's okay.
Thank you very much. Because I already explained it now. from our previous classes. That was why I did not bother to explain. But people that are just joining us, whenever you're taking your coupon, when they give you coupon 7%, so you need to multiply by the par value. The par value is 100. So you multiply the 7% times 100, you're supposed to get 7. 0.007 times 100 is 7. So that's why I didn't bother to explain that part very well. I'm very sorry. Please forgive me. I've mentioned it like 1 billion times already. So I already thought everybody already stabbed it like that. So it's not, there's no confusion to this part, Abi. So what you will now do once you get here, let me move this a little bit because I feel like this is where most people will have problem, and it's just mathematics. So someone should divide 107 divided by 103 for me.
1.038.
1.038. This is what 107 divided by 103 will give you. So now what you have in your next equation now will be.
Sorry, sir, please, can I say something?
I'm with you, ma.
If you say 103 is equals to 7 plus 100 all over 1 plus r raised to power 1, is it not the 1 plus r raised to power 1 that is supposed to multiply 103?
Exactly, that's all it's supposed to be. I was going to say that too. Yeah.
If you cross multiply.
I don't understand what you said, ma.
Your equation says 103 is equals to 7 plus 100 all over 1 bracket r raised to power 1. So if you are cross multiplying, it will be the 1 plus r raised to power 1 that should multiply 103.
Ma, the thing is, let me say something. Please help me in this our class. I don't know. Some people are just looking at this thing. They are not writing it down. Write this thing down. If you are writing it down, it will not be a problem. 103 equals 107 over 1 plus r raised to power 1. If you cross multiply, if your 103 is opening the bracket of 1 plus r raised to power 1 equals 107, if you divide it by 103, 103 is already gone now. Is it not? You don't understand.
Sorry, Mr. Lanchile. The like the word they are trying to say is that you have already cross multiplied. You need to show that okay, this 103 is multiplying the denominator of this 7 plus 1 over 100. And I also suggest that you put this 7 plus 100 into bracket so that people don't punch the calculator outrightly and have a wrong.
I don't think I should.
No, you need to show it. You need to show it. If you want people to understand this lecture, you need to show it, okay? That's the truth.
I do we are in the right track. We just skip one step. It's still in order.
It's still very correct. It's a step that I feel like I just felt like.
Just skip one step.
Yes, you are correct, but some people did not do mathematics to that extent. That's why you need to show it. That's why you are a lecturer.
Please, everyone, we're having too many people talk at the same time. Please, let's just be patient and learn, please.
For the person that asked the question, let me start. This is where the problem came from, and it was actually not a problem. I just when you cross the multiply, when you cross 103 equals 107, 1 plus r raised to power 1. When you cross multiply, you are going to have 103 open bracket 1 plus r raised to power 1 equals 107, right? Then if you divide it by 103, the 103 is going to leave. If you divide this particular equation that is here now, this one that is here, this particular one, this one that I'm highlighting. If you divide both sides by 103, Abi. So if you divide by 103,
Sorry, it makes sense now.
So it makes sense now. So you now have. So I'm sorry if I'm kind of rushing. I'm supposed to be done with bond valuation today. That is one of the reasons why it looks like I'm rushing through all this. So you're supposed to have 1 plus r now raised to power 1 equals 107 over 103. Is it clear now? Let me slow down now. I think the class is getting confusing. Is it clear now?
Sir, it's very clear. It's very clear. Move on.
So to this point, so what was the answer you gave me earlier, sir? Ma? 1.0 what? 1.038. So This is it. So now you have something like, so now you have 1 plus R. Now you have 1 plus R raised to power. Please let's be mute, please. 1 plus R, sorry, raised to power 1 equal to 1.0388, Abi. So this is where I feel like most people would have issues because of normal mathematics. So let me first explain it, because I don't think I'll be able to display it on my system. My system does not have all those functions. So I don't think there's square root here. But I'll just explain. So please, let's listen. We know that if you want to do square root, let's say this is 1 plus R raised to power 1 equals to 1.0338. Do we know that R is also equal to this 1.0338? If you, why would I explain this thing without calculator like this, without all these functions on my system? Let me write it. Let me just write it. I hope it's clear. There's no square root or any function like that on my system. We say 1.0388. This thing that is here now, because now what we are doing now is we are trying to collect like terms. We're trying to collect like terms. So we are opening this 1 plus R raised to power 1. So we are opening this thing. So when you open it, this R now, this particular R that is there now equals to 1 point, because this other side is coming to the other side. This one is coming to this. If you move, what did mass now? If you open this thing, 1 times 1 plus R. So your R now, let me write that one too, before they will say I did not write it. So if you say 1, if you open this 1 plus R with this 1, if you open this thing with it, you have 1 plus. Don't want to do what is going to confuse the class. Let me leave it. If I do it now, it will get confusing. 1 plus 0.388. This
Sir,
one now.
sir.
I'm with you, sir.
Sir, is it possible for you to use that one to extend it? I thought the one is a power now.
I'm coming, sir. I'm coming with you, sir. Let me write what I want to write and I'll explain what I want to explain. Okay, so the person that asked the question, what I was trying to do earlier was I was trying to remove this old bracket. This one that is up here, that is not what you are using to open it. This is the power of 1 now. So if you split this thing, this raised to power 1 that is here, that is the same thing that is still here in this 1.0388 raised to power 1. This thing that is here is still the same. The only thing I just did in this particular equation was I just broke it out. Just the R now is standing alone. The 1.0388 now is raising to this particular same one that is there. But this particular one, let me highlight it. Let's be calm and listen to me. Follow this my cursor. Just follow this my cursor. This 1.0388 is still there. What I just did here now was I collected like terms. The like terms here, R is the only thing that is not a like term here. So R is still there. So the things I brought here to this side, now, this raised to power 1 is still here. Abi? And this thing here now is 1 over 1, because this particular square root now, this particular root, square root is also the same thing. If you say a square root, let's say a square root, a square root is also the same like 1 over 2 or 1 over 3. If it's a square root, 1 over 3. If it's a cube root, is 1 over 3. If it's a square root, is 1 over 2. If it's a cube root, is 1 over 3. So since this one is 1, is like a 1 root. So if it comes here, it's going to be 1 over 1. Oh, people don't understand what I'm saying. I don't know how I want to explain.
Yeah, I get it. You are trying to use indices there to change.
If you do
root 2 is still the same thing as 2 raised to power 1 over 2.
Yes, raised to power 1 over 2. If it's a cube root, it's the same thing as 1 over 3.
2 raised to power 1 over 3. Yes, I understand.
It's the same thing as raised to power 1 over 3. I don't have a cube root on my system. I would have
yes,
done it.
So now this root 1 now, you're just
root
changing
1
it
now.
back
I'm
to 1
changing
over
it here
1.
now to 1 over 1. Exactly. And here now, and in this first one now, we have plus 1. So is this plus 1 now that we are bringing? And immediately plus 1 is crossing the equal sign. It's turning to minus. I'm coming. Let me do something like this. For the second one, for the second question that has 2 years, once you have 1 plus r raised to power 2, raised to power 2 equals to whatever you have here. Whenever it's crossing to that side, it's going to be raised to power 1/2. Because now it's a square root. So a square root, if you want to move a square root to the other side, it's going to change like 1/2. Square root is also the same thing as 1/2. Cube root is the same thing as 1/3. Then this particular 1 plus, whenever it's crossing to the other side, it's going to turn to minus. If plus crosses to the other side, it turns to minus now. So that's where I go to my -1. Mathematics is hard.
Sir, it's got it, sir.
Please, any question? I'm sure there will be question. Is there any question? I did not explain well. Should I explain again?
Yes. So maybe
Please
you
help
should
us
help
increase the
me
font.
put it on the group. I don't know. Please explain.
Please help us increase the font, sir.
Is
On
it
a
okay like
paper.
this now?
The group. I mean,
Is it okay like this?
Yes, it's better like this. Yes.
Let me increase everything. Please, let me tell you something. This is even part of the simplest part of SFM. Very simplest part. If you do synergy that will tell you that all of us know that 1 plus 1 equals 2. Synergy will tell you 1 plus 1 is not equals to. And you will not do anything about it. You will learn it. You don't have a choice. Now you won't qualify. So I think this font is okay. So let me explain again for the last time. What I said earlier, I said, let me use square root and cube root. All of us that went to school, we all know that when you say square root or a cube root, it also means 1/2 or 1/3. It means raised to power 1/2 or raised to power 1/3. That is what cube root means. So if you have something like, let me write it here. I'm explaining mathematics again. So if you have something like, I don't have cube root function, that's the problem I'm having. I don't have cube root function on my system. There's no cube root function. But let me just write it like this. Let me write cube root. Let me move this down. Let me write cube root 3. Please manage with me. I don't have cube root function on my system. I don't think anybody has. It's not only me. It cannot be only me. Let me write cube root 3. We all know how cube root looks like on our calculator now. Cube root 3. So it's still the same thing as, let me say, this thing. If you put cube root 3, it's still the same thing as 3 raised to power 1/3. Is this clear? This cube root 3 is still the same thing as 3 raised to power 1/3.
Yes.
Square
I
root
got
3
it.
is still the
I
same
got
thing as
it.
3 raised to power
I
1/3.
got it. We got it, sir. Isn't this is?
Yes, please let me just continue explaining in case of for other people. So for this one now that we have for 1, whenever you are moving, it's going to be raised to power 1/1. So that is where I got this 1/1 from. And the one, this -1, it was right there, the 1 plus r. Because when you open the bracket, the r is coming here, the r is still remaining, but the 1 plus 1, if you are moving it to the other side, it's going to turn to -1. So that's where all this came from. Don't think there's any better way I want to explain. Another thing I will still do is, what I would do is, because I'm a good person, I would press it on my calculator and I will use it to send a voice note to the group chats. I think that is...
sorry.
Mr. Larry, what do you want with you?
So I want to point us to attention, like for those things that we have in raised power, I want us to be using bracket, because most times when you put all these things in a natural display form, like the way it's written here, calculator won't give you the right answer because of how the functions are. So this 1/1 now supposed to be together is after he has gotten that value of 1.03388 raised to power 1/1 into bracket -1. That will give us the right answer we are looking for. I don't know if you get me.
I understand.
So the bracket is very, very important.
Like I always say, that's why I'm saying it out. Be trying it on your side, so you know the one. If you don't get it, tell us. We'll tell you why you did not get it. But me, I'm not using calculator. It's the figure you give me. I'm putting here. So,
Yes, sir.
anything?
Hello, sir.
Please hold on, please. Let me continue. I need to just hold on. I will soon be done with this. Then I will give time for question. So, 1.0338. 1/1 equals 1, obviously. So it's still the same thing as 1.0338 minus 1. So our R here now equals, so someone should give me figure 1.0338 minus 1. I think that should be 0.0. Sorry, 0.0388. Is it correct?
Yes.
Which is, if you change this to percentage, I think this should be
3.88%.
Sorry. So anybody that got 3, I think somebody sent, I don't know, 3.88%. So that's what you have for year 1. So, and they are supposed to like increase across the line like that. So you can just use, you can do your year 2 like this, do your year 3 like that.
0.038, sir.
Yes, that's 3.88. So I feel like where the problem would have been was that 1 plus r raised to power 1, 1 plus r raised to power 2, 1 plus r raised to power 3. So when you get to that place of 1 plus r raised to power 3, what you are doing is, when you are taking it to the other side, don't still take the cube root there. Change it to 1/3. 1/3 is still, the internet is not stable. Cube root is still the same thing as 1/3. So once you take it there, you are just going to be, let's assume it's 1.0338. It's just going to be 1.0388 raised to power 1/3 minus 1. Then you get your answer. I think that's what that. Please, is there any question? Duration. Yes, okay. Is there any question with this? Any question with this question? Any question, please? This is 10.
Are we going to use that one to divide?
I cannot hear you, ma.
Are we going to use that one? That one
Hello?
raised to power 1.
Hello?
To use the one to divide the 1.0338 in bracket.
What did you say, ma?
Are we going to use the one that it is used to divide? Yes, sir.
Can anyone hear me? Is it my network?
Hello, sir.
Can anyone hear me?
Yes, I can hear you very well.
I think it's a network. She has gone.
Please
Any question from?
let us carry the screen up. I bet, let me just screenshot it, please.
Yes, ma'am. So while you're screenshotting, any other question, please, before I move on? I think we have about how many participants? 85 participants. Any question from anybody, please, before I move on?
Sorry, sir. So this is present value equals to cash flow 1, or what's TF1, please?
Cash flow of year 1.
Okay, plus face value. Okay. Yeah.
Face value of year 1.
Thank you.
Fair value.
Let us move on. Oh.
Mr.
I used a
Lashili.
different method, but
Mr.
I got the same
Lashili.
answer. So I'm going to send.
Hello, sir. Hello, sir. Hello.
Yeah, I think I was out for some minutes. Please, can
Hello,
you hear me?
sir. Mr. Lashili.
Yes, sir. Can you hear me?
Yeah, I think the best way to explain that part that you are saying in this is just say, once you are trying to collect that times, you get the inverse of the root. I think that's the best way. The inverse of the power, I mean.
Inverse of the power. I do not do
Yes, I
math.
think.
Inverse of the power, inverse of the root. Anyone that's comfortable for you. I think inverse of the power is very fine. Inverse of the power is very fine.
So just know that anything we have as a power to be 1 over that thing. When you are taking
Yes,
it to
you
just,
have the power, you have 1 over that. And yes,
I think that's the best way to understand it.
yes. Thank you very much. Thank you. Please, is there any question concerning that?
We cannot see your screen again. No.
Everybody and continue the class, sir. Then you open.
We cannot see your screen again.
Can we move ahead with today's agenda?
One. You can see my screen now. This is comfortable.
Please, can we move ahead with today's agenda?
So, like I said, so this is what you would do. So you can continue. I will send 1 or 2 more questions to the group chat for more practice. And I think I would do the honor of going to group chat, of going to Pathfinders and bringing questions for everybody. So thank you. That is all for value of the bond. So let's go to duration. So when we started bond, someone mentioned something and I corrected the person. If anyone can remember the person wanted to talk about maturity of bond. Then she mentioned duration. And I was very sure I corrected the person because maturity is different from duration. Maturity of a bond is different from duration of a bond. maturity of a bond. You can buy like, let's say like you can buy 4 years bond, you can buy 5 years bond, you can buy 6 years bond. That's maturity of the bond. But duration is like, how long would it take you to recoup your investment? If we know payback period, you know duration. Duration is like payback period. How long will it take you to recoup that your investment? The calculation is not like it's not like payback period though, but just have it at the back of your mind. Like that is what it means is how long it will take you to recoup your investment. So moving on, duration. We have 2 types of duration. We have what we call modified duration, and we have what we call, let me move this down. And we have what we call is it Macaulay? We have what we call Macaulay, yeah, Macaulay duration. Then we have what we call Macaulay duration. I think this is okay. And we have what we call Macaulay duration. So what I will do now is let me see if I have any okay. So there's, like I always do, there's formula method and there's tabular method. But I don't want us to do the formula method because it is very confusing. I will not lie to you. It is very, 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 very confusing. But the tabular method, it is still the same thing as what we've been doing since. Still the same, our normal cash flow, year 1, year 2, year 3. It is still the same thing. So what I will do here is I'll give you like the tabular, like the idea for the tabular method for Macaulay. You use Macaulay to get modified. That is the way it works. So like we always do, whenever we want to calculate our MPV, we get our year. So let's just use tabular method. Don't let us stress about, my phone has reduced again. Don't let us stress about the formula method. You can use anyone in exam. Nobody will say use tabular, just use the one that's comfortable for you. I think this one is very nice because this is what we've been dealing with. So like we used to do here, cash flow. We have our cash flow here. What's the next thing? We have discount factor. Normally, I'll move this thing later. We have present value, our PV. And now for duration, we have something we call weight. That is the way the stuff is. That's the way duration is calculated. We have weight. You know, normally if you were calculating your MPV, this was supposed to have stopped here. But here now we now have weight. And your weight now is your year. Let me do something like this. Sorry. Is your okay, let's do like this. Let me do this so it will be very understandable. So let me say this is A, this is B. This is my font that I increased last one. This is C, this is D. So if we want to get our weight now is our A. Let me put this in brackets. Our weight now is our A multiplied by our D. That is how to get our weight. So after we put our number of years, we get the cash flow. Please and please and please, for when we solve questions, you will see too. When you are calculating duration, there is no initial cash flow. There is no initial cash flow. There is no present value. So you just year 1, year 2. It's number of years you're trying to calculate. So you just do year 1, year 2, year 3. No need for year 0. There's no year 0 when you're calculating duration. Because you want to get the amount of time you want to use to recoup your investment. Now, why do you want to calculate year 0? The year you're investing. You are not going to calculate. You start from year 1. Okay, let's say I put investment. Now I want to invest in MMM. I'm investing 1,000 naira in MMM now. And I want to say, okay, when would this MMM give me my money back? Would I count the year I'm investing? I will not count year 0. Now let's start from year 1, year 2, and year 3. So for that reason, there will not be year 0 in our duration. So I'm using all these examples, MMM. So remember in exam, don't put year 0. You not count year 0 when you're investing in MMM. So you do year 1, year 2, year 3. You put your cash flow there, you discount it, you get your present value. When you get your present value, you multiply by the years back, you get your weight. So when you get your weight, you now, so if you now want to get your, let's come to this screen. So let's say you've gotten, we'll still solve an example real quick. Let's say you've gotten your summation of your present value, you've gotten your summation of your weight. So your Macaulay duration, now let me just write MC. Sorry, let me move this down. So you come here now, you say MC, which is Macaulay. I'm not be writing his full name, I'll not be my name. So Macaulay duration. The Macaulay duration now is now the formula for Macaulay duration is now total weight. Your total weight over your total present value. Your total weight over your total present value. This weight that you got here, the total, you will now divide it by the total present value. That is all for your Macaulay duration. So let me write the full one because someone will be asking what is MC duration. Because people are very fun. Person will come to my DM and say, Mr. Shile, you said something about MC. What is MC duration? So this is Macaulay duration, total weight over total value. If you are using, please, you can check some textbooks, they will use formula method. If you learn the formula method and it works for you, fine. But maybe the time permits us, I will write the formula for us, just check. You will see how confusing it is. That's why I deliberately did not bring it to this class. Since this works, I think this is very comfortable for us. So the second one that I said we have Macaulay and we have modified duration. So the formula for modified duration now equals to, so your modified duration now is whatever you get for Macaulay duration. So you do Macaulay duration over is this even showing? Can you see?
Yes.
Yes,
You can see.
Macaulay duration. I'm very sorry, it's the person that told me to increase my font. I will reduce it a little bit for the side. It's too big. So to be able to contain everything I want to write at once. I think 18 is fine. I think this is fine. So we're able to contain everything I want to write at once. So your modified duration is Macaulay duration over 1 plus R. Your R is still not changing. No? Your R is still your normal yield, your normal rate of return is still the same thing. So that is all you need for duration. I think duration is easiest. Anywhere you see duration is free mark. So this is you don't swallow also. So this is all for your duration. So let's pick 1 or 2 questions and solve. I feel like we should solve duration of that our last question. I think there was one question we solved that had duration that I said someone should remind me. Which question was that?
Yes, that's the
Yes.
That's
Multiple
the number.
limited.
That's the multiple. Yes.
I think I have question from Modupe. So Modupe.
Should we call it for you?
Hold on, please. Okay, I think I have found it. I'll be fine now. I think this is it. So let's so no, but I want us to solve. Okay, that's fine. So let's say solution. Let me move this down. So like I said, for what we need here, so the first thing we do here is our year, Abi. After year, we come here, we say cash flow. Talk about cash flow. We come here and we talk about our discounting factor. Discount factor. We do PV and we do weight. And we do our weight. So how many years? How many years, please? I don't.
Is it for Modupe?
Yes, that's the one we are talking about.
4 years. 4 years.
Let me write the name here. Modupe PLC. So we said 4 years. So if we come here, we say year 1, year 2, Year 3. No, this font is too small. Cheap. What I'm doing. I will increase it. Sorry, let me just. Then year 4. So these are our years. So what's our cash flow? Who that asked the question? People of God.
We have 5%. 5% is coupon rate.
5.
5 billion.
5%.
That's
The company want to raise 5 billion naira from the bond market.
So we said is 5%, okay?
Yes, sir. Redeemable at par.
Okay, redeemable at par. So here we have 5. Our year 2 we have 5. Let me bring this down. Year 2 we have 5. Sorry that my stuff is not straight though. Year 3 we have 5. And year 4 we have 105. Please, my smart student. I know some very smart students. When I was at I used to do that thing very well. Like, it messed me up. Don't use annuity for duration. No. Please, because you need to calculate weight. Each weight.
Okay.
You need to add up all the weight. So you cannot use annuity. Even me, I would have used annuity, but you cannot use annuity here because you need the weight. So you need to calculate it. 1. So what's our yield?
Our yield for year 1 is 3.3%.
Yes?
3.3% for year 1.
3.3% for?
Yes, year 1.
Okay, they have different years.
Yes, they have different yield for different years.
Okay. Let me just use this as an example, even though it will not work, but I did not know you had, I thought you had just my yield. So let me just 3.3%. 3%. Let me just use this.
No. No, it's not the rate of return we're supposed to use.
What are you doing? It's 3.57.
3.57, please.
No. Year 1 is 3.
Have you forgotten? We added risk-free and spread.
Yeah, 3.57. That's true. 3.57. Sorry.
I'm laughing. Someone's giving my discount factor. This would not work, but let me just explain my.
Gary is too much. Sorry.
Okay, this is wrong.
So why not use it one by one for the year now, so that we can understand for this particular question?
No, listen to me, please.
I'm confused right now.
Don't be confused. Just follow me. I'll put you on the line. I just noticed something now. This would actually not work, but let's use it. But it will not work, but let's use it. But so someone should give me my discount factor.
Mr. Lanchile, sorry.
But I thought we can use
before the discount factor column, can we put something after the cash flow, like rate? So we just put the rate there. The rate, like instead of having the rate. So we know that year 1 we're having 3.57, year 2 we're having 4.2, year 3 we're having 5.
Like I am saying, like I said,
it won't work.
It will not work. Please, I just want to use as an example. Let's assume this is 3%. What we are using to discount is 3. Let me just use this to give an example of duration. It will not work. I will give you what will work. Please hold on. Please. Let me just use this as an example. Please, someone should discount this thing for me. Someone should please discount this thing. Please.
Year 1 is 0.97009.
9709. I thought you had the same yield. I've forgotten the question. That was why I suggested this method. So please let's continue.
Year 2 is 0.9426.
26. Year 3. Someone should please press back. Don't let him be the only one.
0.9151.
51. Sorry. 51. Year 4.
Someone
should have been getting the present value like that.
0.3885.
5. So my present value, I'm supposed to be getting figures like that.
For year 4.
93.29.
What did you say?
93.29 for year 4.
23.29.
For year 1, 4.85.
4.85.
Year 3, 4.58.
Year 2.
4.71.
4.71. So for my weight now, I said your weight now is A times D, which is your year times your PV. So someone should give me my first one. First one is still going to be 4.85.
4.8.
Second one,
Year 2,
9.43.
9.43.
9.43. Year 3.
13.74.
13.
How come 4.7?
Year 4.
Year 4.
373.16.
The year 2 is 9.42 now. How did person get?
Someone should confirm.
Year 2 is
9.42.
9.42. So what's our total PV now?
107.43.
Total PV equals
107.43.
107.43. What's our total weight? Yeah.
401.17.
Total weight equals, what do you call it?
01.17.
0.17. Very good. So according to our formula that we said it is total weight. So we said Macaulay. This is actually even very good because this is what is very, very brilliant. I even love the way God used to do miracles. So what I would do, I've used this particular question. This is not what I'm supposed to do, but I've used this one to explain duration. I will tell you what you're supposed to do for this one. Then the last question, we're going to use it to do assignments. Very brilliant like that. God has, because I would have solved it for you people, but God has done miracles assignment. So Macaulay duration, I said it is equal to total weight over total PV. Abi? So MC
Yes, sir.
duration. For MC duration now. What's my answer, please? Equals to, sorry, let me write it first before people come on. Let me say 401.17 over 107.43. So what's my MC?
3.734. 3.7 years.
3.7 years. That is the amount of years it takes that it will take you to recoup your investment. And we said the rate of return is 3 years, and it takes you 3.7 years to recoup your investment. So we used to invest there.
No.
Where were you? I would not. So modified duration. And this one now equals our MC duration over. Please, do you understand what I mean by MC duration? It's Macaulay duration.
Yes, sir. Macaulay.
That guy's name is too long already. 1 plus R. So let's say, so now 1 plus R.
3.73.
Is that my answer?
Yes, final answer.
Please hold on. MD. I mean, my own modified duration is MD. MD equals to what's 3.7 years, Abby? 3.7.
Yes. Divided by 1 plus 0.03.
1 plus, let me just say, this is 1.03. So
By
my
1.03.
So my MG now equals what?
3.6.
3.6 years. Brilliant. So this is how duration works. I think this is the simplest among all. This is how duration works. So I think where we did what we are not supposed to do for that what's the name? Modupe Abi, Modupe is that like it's still the same thing. The way it works for the way it is for others is still the same way it is here too. I'm trying to look for the question here, so I'll read it properly before I go and make another mistake. So, okay. So I think I found it. Found it. Okay, so let me give you, like I said, I'll give you the formula, then I will tell you what you should have done here. So the way duration formula works, let me write it, but it will be confusing here. Duration formula, this is it. Oh, please, don't let us get confused. If you don't want to use the formula, don't use it. What duration formula is telling you is saying duration equals cash flow multiplied by time. Let's say you want to do for year one, over, you now come here, you say 1 plus R, where's my plus? 1 plus R, 1 plus R raised to power 1 for year one. You will now come here again and do, now say plus, you see now say your cash flow times T for year two, you do the same thing again over 1 plus R raised to power 1 plus R raised to power 2, like that throughout the year. So the last year now, you now have plus your cash flow times time. That's for the last year, plus the last year. So let's board now. So you now do your cash flow plus the normal that we used to do now, plus power value of face value, times your time for the last year. Let's say the last year is 5 or 6 over 1 plus R 1 plus R raised to power, let's say it's year 4 now, year 4. Let me just assume it's year 4. So all these things now, all these formulas, everything. Let me see if this will work. I hope. Very good. So all of this now over, but before you get to duration, obviously you would have calculated present value, you would have calculated yield to maturity. So all of this now over the present value that you got. All of this over present value. So if you like this formula, you can go on. I said I was going to, I'm done. So if you like this formula, you can use it. But if you like that simple stuff that we did, so let me tell you what the mistake we made in this one that we did here before I accepted to use 3% and it went like that. That I don't have the question until I opened it. That I think the first thing please, can somebody hear me? So I talk to myself.
Yes, sir.
Yes, sir, with you.
Okay, so that the first thing we calculated first was the current, the price of the bond. That was the first thing we calculated. After that, we calculated the yield of the bond. Am I correct? Where we had, I think we had 5.88. And what did we have?
Yes, the IRR.
the IRR 5.88. So whenever you are doing your duration, if you want to do your duration, you will not discount by the giving yield again. Because that was what they provide, but now you already have your own yield. So that is what you use to discount this stuff for duration. So while we were discounting, we should have used 5.88. But because I did not have the question with me then, I did not notice. So this is how it works. Whenever you are doing, you know that when we did our yield, we used the present value that we got, didn't we?
Yes, we did.
Yes, I'm very sure. Please, if you have not solved it, try to solve it again. When we calculated our yield, we used the present value. I think it was 90 what, ma?
7.24.
97.24. That was what we used to calculate our RRR. So when you are using your yield too, so when you are doing your duration, you use that yield that you got. I think it was 5.88. So it's that 5.88. That 5.88 would have been your discount factor. Yeah, this discount factor, you would have used 5.88. Then you get the present value, then you get the weight, then you do your Macaulay duration. So that was the mistake we made. So please try
Sir,
it.
please, I don't get you. I didn't get you. Come again. I want to try to understand you when you are explaining it with respect to the other one that they gave us yield for each year.
Okay, in respect to the one that they gave us yields for each year. So what I'm saying is, in the question, they gave us different yield. We added our basis points to it. Then we got our total, we got our yield.
Yes.
Then we calculated the correct,
Yes.
we calculated the current market price, which is the present value of the bond. I think we got 97.24. So when we wanted to calculate our yield to maturity, for our year zero, we used our current price that we got for ourselves. Was that not what we used, Mr. Honorable Pope?
Okay, yes, I'm with you.
We used our current market price, the 97.24 that we got. That was what we used for our year zero. After that, we got our yield. So when we want to calculate our duration, you know, I said we should always discount with our rate of return. So when we want to discount now, you will use the yield that you got. In your question. Before they will give you duration, you would have calculated yield from beginning. Part of the question, you would have calculated yield, you would have calculated current market price. That is how they set the question. Current market price. But if they did not tell you to calculate yield, they will give you one yield, only one. They will give you one yield. They cannot give you, to calculate duration, I don't think they will give you as many as possible. Please, is there any question?
What was the interpretation of the years we got?
That it takes this one now, the first one that we got 3.7 years. It will take the investor 3.7 years to recoup his investment. That is the interpretation, man. So I think Mr. Honorable that asked the question has gone. So that is, please, is there any question for duration, or is it clear?
The modified too, is it the same?
Yes, it's the same thing. They're just two different ways of calculating duration. So since so what I would do is please calculate this one that we finished. This particular
Sorry,
one.
Mr. Lanchile.
Yes, sir.
So my interpretation is that if you do modified duration, it will take us a shorter time compared to the Macaulay duration.
Thank you very much, sir. That's what it means. People are catching up. It's good. I'm very happy. So like I said, like I was trying to say, so for this one that I use 3%, please and please. This one is classwork. I need to enter sources of finance this night, whether I would like it or not. I'm entering sources of finance. So this one that we did that was 3%. Please, let's attempt this with our last yield that we got. I think our last yield was 5.88.
Hello, sir. Sir, please, I don't know how you got discounting factor. I'm just lost, please.
We just
This discounting factor is just assumption.
We just assumed, ma.
How do I do it? Let me assume it as in 0.97. I don't know how you assume and got it. At least let me follow along. I'm lost there.
How we got what? Relax. I'm not even asking your question. Relax. Calm down.
I said
the calculation, I guess. She wants to know how it was
yes.
calculated. To get
Yes.
the
That's
how we got 0.9709.
yes.
is discount factor. You will do problem don't deal. You will do you will do 1 plus r raised to power minus n. That is the formula to discount.
Okay.
1 plus r raised to power minus n. So 1 plus r, your r is 3%. 1 plus 0.03 plus raised to power minus 1. You're supposed to get 0.9709 ma.
Okay. Okay. That's
Did you
all.
get
That's
it?
what I'm asking for.
Thank you very much. You can
No,
write the
Otis
formula
has
down
passed
so you
away.
will not forget. Write it down. So my people. So please, like I said, our yield for the last class, please let's try to use it to solve this question. 5.88. Let's use it to solve it. You're supposed to get, I think I got, what did I get? Oh, wow. I want to tell you my answer, so you will not be, nobody will be sending me. I think you're supposed to get 3.71 years. 3.71 years. You can write the answer. So if you don't get that, you can check your, that's if you use the yield of 5.882. You're supposed to get 3.71 years, 3.71 years, 3.71 years, whatever.
For
That's
what, though, please?
3.71, 3.71.
For what?
The yield that we used, that we got 5.88. If you use the yield to calculate this duration, we assume this 3%. So I'm saying don't assume 3%, do a classwork on your own and use the discounting factor of 5.88, which was the yield we got previously.
Okay.
So use it and get a duration for me. But the answer you're supposed to get is supposed to be 3.71. So if you get it, fine. I don't want, because I want to give assignment, and if I give classwork, people first send classwork, then send assignments, I don't know, the messages will pile up and I might not be able to check them all. So the classwork, you're supposed to get 3.71 years. So if you get 3.71, fine. If you don't, then you can come to my DM. I will explain to you on how to get.
What I got for my yield to maturity is 5.89.
You can use 5.89 too.
Okay.
You will not get 3.71, but you will get close. So
Please help us so that we can snap the solution.
I should do what?
Help us scroll up so that we can, yes.
Up or down? Turn it up, turn it down. Like this or like this?
So that we can snap the solution at once.
So unfortunate that I don't know what happened. I just made myself outside. I'll try to catch up. Yes, sir. I was struggling to join back.
We've entered sources of finance, so no time.
No problem.
But I think you understand now.
I was in the midst of the explanation when I just suddenly made myself outside, so I had to take some minutes, try to come in again. But
Sir,
there's no problem.
DM me. No, we are together. Just DM me. I would, and with your question,
okay.
I would be glad to answer you.
Sir.
So anybody that is snapping, you can snap. So let me. So I'll send the assignment. I'll send it to the group chat. So please refer the assignment
Slow
back.
down.
I should slow down. Sorry.
Scroll
down.
Sir, Mr. Shile, we are going to watch this thing later.
Exactly. So if you watch the video now, you will see all these things there. So moving on, thank you very much. That is the end for bond valuation. Any question I see, both theory, both objective, both calculation, I'll be forwarding into the group chat. So endeavor as much as possible to try them. If you don't understand, please come to my DM. One woman brought one question to my DM. I saw the question. I said I will refer back. Since then, I have not. And I don't know if she's there. I'm very sorry. I'll check it this night and I'll refer. It's not part of this question. I don't know where she got the question from. But I'll refer back. I'm very sorry. A lot of things just the wife with children with. So moving on, let me just introduce sources of finance in next 15, 20 minutes. I don't know if I can even finish. That one is theory. You can all read it on your own, but let me still brush through it. Okay. Nobody's checking anything here now. Let me just open it on my, let me just open my account pack for this one. Don't worry, you watch the video. So you will see anything you need there. So let me open account pack. Then we'll do sources of finance in the next 15, 20 minutes. Anybody that does not have this SFM past question, 2014 to 2022, please try to get it. It's a combined, even me, I have all the pathfinders. Me that I'm not writing the exam, I have all the years pathfinder. So please get pathfinders and where's my SFM pack back? and get SFM Apex guide. It helps. This is my SFM back. Problem deal. SFM. Don't have SFM pack again. Okay. So I open sources of finance, we cheat sources of finance a little bit and see what we can. So on Wednesday, I don't think I'll be the one taking you on Wednesday because you need to start cost of capital. So on Wednesday, you do cost of capital. Then maybe next week you will see me and we'll do portfolio theory because you need to do cost of capital before we do portfolio theory. So I think you do your cost of capital on Wednesday. I don't think that will be me. So anyways, someone should check page for cost of capital for me, I beg. I mean, sources of finance.
What of convertible bonds, sir?
That is actually still part, but what I want to do with convertible bond is I actually still you will take it in cost of capital most likely, but I want to see if you don't, I'll most likely come and but you most likely do something like that. I want you to have like what it means when you are calculating like cost of debt and cost of all these things. That was why I deliberately left it. But when you are done, I have it in my mind. We'll definitely take it. Sources of finance, 297, yeah? 297. So sources of finance, please let me brush through real quick and where is it again like this? So I will know this one is just pure theory. It's in your icon pack that even me I've seen it. Sources of finance. So we all know that this is self-explanatory. You can just open your pack 307, read it on your own. I will brush it for you. So we have about 3 or 4. Hello, can you hear me?
Yeah, we are with you, sir. We are with you.
My network is breaking us. So I said we have about 4 or 5 sources of finance. We all know that to finance like in financing the company activities, you can be classified into like financing of their non-current assets, their working capital, their growth, research and development, and all of those. We have about like 5 sources of finance. Sorry, I'm saying from my head, make the move down so you'll be seeing. So we have about like 5 sources of finance. We have short-term sources, we have medium-term sources, we have long-term sources of finance, we have Islamic finance, and we have small and medium. All these ones is not, you can just focus on short, medium, and long term for now. When we get to Islamic finance, we'll talk about Islamic finance. But we have majorly 3 sources of finance, which is what is in your pack. You have the short-term sources of finance, you have the medium-term sources of finance, and you have the long-term sources of finance. Joseph. There's a light dog, it's the worker like this. So we have short-term, we have medium, and we have long-term sources of finance. So they are all here. For your short-term sources of finance, we have about like 6, 7 like sources of short-term finance. So we have accruals, we have trade credit, we have bank credit, we have commercial papers, we have bill discounting, we have invoice discounting, we have according to what is here, we have bank overdraft, we have short term, we have trade payables. Trade payables is the same thing as trade credit, like I mentioned. So bank overdraft, you all know what bank overdraft is. You all know what bank overdraft is. I should still explain what bank overdraft is. No, now we are all chartered accountants. So, but bank overdraft is like a loan facility now that is extended by banks most times, through a bank most times. So it's a source of finance. That's short-term source of finance. So you can check your pack and jot down something about them, about the short-term sources of finance. We have about 7 or 8, but you can see all their explanations here. We have trade payables, debt factoring. I'll explain this debt factoring because I think I've seen a question on it earlier. Please, before we finish class, someone should remind me to explain this debt factoring. So medium-term sources of finance, we have lease finance, we have hire purchase. I've not seen that here. We have lease finance. You can be jotting, no, we have lease finance, we have hire purchase, we have franchising, we have venture capital. Those are examples of medium-term sources of finance. Then we have long-term sources of finance. I'm trying to open them here. Long-term sources of finance. This icon park is please, let's all read this part one, just pick it out. No, I'm just saying I'm saying all these things from my head. So long-term sources of finance, we have debt, we have equity, and we have preference shares. Like those are the common ones. Then for the Islamic finance, you can talk about ijara, sukuk, what I think is mudra. Please, when we get Islamic finance, we'll talk about all these ones. Those ones are not the topic for today. So what we just need to do here is explain some of all these short-term sources of finance and the long-term sources of finance. So you can check the ones your pack gave you, and you can follow the ones I've listed, because I listed like 7. I think the pack just gave you like 3. I told you accruals. I told you trade credit, which is also payables, bank credit, which is also overdraft, debt factoring, commercial papers, bill discounting, invoice discounting. Those are examples of short-term finances. So accrual, we all know what accrual is now. There are those expenses that the company owes to others, but they are not yet due for payment. Those are but they've rendered the service. That is what accrual means. Trade payable, trade payable, trade credit is the same. We all know what trade payable is. Don't need to explain that. Overdraft, I think I already explained overdraft earlier, but is a loan facility that is extended to a company through bank. Is a source of finance. Is a short-term source of finance. So that is what back. So debt factoring that I said I want to explain. Please let's listen to this debt factoring. I think I've seen a question on this debt factoring before, but I cannot place it. So debt factoring now, I think this is the only one that most of us might not have heard before. But debt factoring is a form of arrangement. Between a company and a factor, where the company sells, like there's something like this, what we call outstanding invoice. So this company sells outstanding invoice amounts to the factor at a discount in order to raise funds. That is what debt factoring. Let me form a proper definition with that. Let's say debt factoring is a form of arrangement. Debt factoring is a form of arrangement between a company and a factor, where the company sold the outstanding invoiced amount. To the factor at a discount in order to raise funds. Please, is it clear? But I think your pack.
Sir, come again.
I think your pack, let me check up. I think your pack to explain debt factoring. But what I said debt factoring is a form of arrangement between a company and a factor, where the company sold the outstanding invoiced amount to the factor at a discount in order to raise funds. I'm trying to check if it's written here in your pack. Debt factoring, okay, this is it here. Companies that use debt factors to collect their trade receivable might obtain financing or most of their trade receivable from the factor. Factoring was explained in the earlier chapter. Please read the earlier chapter. But you can use that when I give you. There are about few steps or few procedures that are involved in debt factoring. I cannot list them. I would snap them and send to the group chats. Please endeavor to always check what we send to the group chat. So I'll snap the procedures involved in debt factoring and I'll send to the group chat. So we have commercial papers. There are short-term unsecured money market instruments that are issued by large companies to finance trade. I'm just explaining all of these things randomly. So there are features of commercial papers. I think that's all for short-term sources of finance. We have medium-term sources of finance, where I spoke about sales and leaseback, hire purchase, franchising, venture capital, leasing. All those things are what we own. We all know what lease is: an agreement between two parties, lessor, lessee, where lessor owns the capital assets but allows the lessee to use it for a period of time. We know types of leases, operating lease and finance lease. We know those ones, differences between the two of them. We know those ones. So sale and lease back. In sale and lease back, a company owning the asset sells it to the lessor. This one, you sell it to the lessor, then the lessor pays immediately for the asset, but leases the asset to the seller. So like now, you want to sell this your laptop, you sell this your laptop to somebody, then the person, then you that you sell it, you now pay, then lease it back to the person that sells the asset to you. So that, but you still be using it, but you not be paying it's not small amount just to lease the asset. That is what's called by sale and lease back. You sell it and you lease it back. So hire purchase is, we know hire purchase now. Hire purchase is an agreement between two parties, owner and user, where one party acquire an asset from the other party and you pay through instrumental payments. That is hire purchase. Franchising. What if I were you? And I will do it again. I will do it again, please, so that so you'll not be like I'm just. What I would do is all the sources of finance I mentioned, I'll mention it again and I will dictate properly now for you to write. So what you would now do as a student is that you will go and check them out one by yourself, because all these things I mentioned are things that we've all heard them before. They are not new to us, but just the list. I will list them again and dictate properly when I'm done. Then we can just go and get one of you details about them. Thank you. So the next one is franchising. We know what franchising is, where license is is a form of license usually granted to a business by a company for the use of, like, a company will give another company their license to operate on their behalf. There will be rules and regulations on how to do it. There's an example. I don't know what's the name of this company. Jesus. I've forgotten. Someone should give me an example of a company that are franchised that they are not from Nigeria.
MTN.
Oh,
P&G.
we can't say
P&G.
MTN.
I think it's Mr. Biggs.
What
Mr.
of
Biggs.
ShopRite?
Mr. Biggs.
ShopRite.
Mr. Biggs.
Yeah,
Thank you.
Mr. Biggs.
I don't pass. So that is what people have passed. You passed this, you've chatted SFM. So that is what we mean by franchise. So the advantages of franchising.
Sir, let me ask you a question, sir. Does this mean that when you franchise a company, that means initially the company is not operating in that country? So do you want to operate in a similar business with them, or you are just borrowing their name?
No, you're just using their name. You are using their name.
Okay, so
And you are using
what you are selling or what you want to engage in, it's not compulsorily what to be what they are doing too. It can be something different, right?
No, I think it has to be what they are doing. You cannot obviously differ from what they are doing. I think it has to be what they are doing.
Okay.
Please, the big four, do they fall under this category?
Yeah.
Did someone answer me? I think someone said yes.
Yes.
So there you have it, man. Me, I'm not really sure. I'm not really sure, but I can search on it. But
Sorry, I'm not sure Big Four should fall under that franchise.
No, Big Four is not under franchise though.
Why would Big Four be under franchising?
They are not under franchise though.
Okay, there you have it, and you can. I'll definitely research, but I really do not have idea on that. So, continuation of our class. So you check. There's advantages franchising to franchisee. I'll snap this one. Please, let's know the things I'll say. I'll send. In case if I forget anyone, you remind me. I said I'll send an assignment. That assignment I can never forget. I will send assignments. I will send procedures involved in debt factoring. I would also send advantages franchising to franchisee and franchising to franchisor. Like the advantages of, let's say, MTN now, if you are giving your license to somebody, what's the advantages for you? What's the disadvantages? Okay, if you are collecting your license from somebody, what is the advantages? What is the disadvantages for you? Please, let's check our pack and read more on all these things. We have venture capital. Venture capital, this one is like private equity. They provide finance to companies in their early stage, their early startup phase. That's what venture capital does, like private equity company. So we have advantages of venture capital and disadvantages of venture capital. Should I snap this one? I should dictate. What's time 11? Time has gone. So I will snap. Oh God. I will send advantages of venture capital and disadvantages of venture capital to the group chat. So after that, we have We have long-term sources of finance, where we have debt financing, we have preference shares, we have equity financing. We all know all of these. Debt financing, you go to bank, collect big money loan, long-term loans. So that's a debt financing. Preference shares. Sorry. So with our debt financing, before I move on, we have traded debt and we have non-traded debt. Non-traded debt. I explained all this when we started. I think when we started bond. I think I explained what they are. Where I said traded debt is a kind of like security that can be bought and sold in the financial market. Why non-traded debt are debt that cannot be bought and sold in the financial market. Example, overdraft, bank loans. That's non-traded debt. Traded debt, example, bond, debenture, loan notes. Those are example of traded debt and non-traded debts. So as bond is here, we already spoke about bond, so I don't think that is supposed to be a problem. Preference shares can also, next one is preference shares. Preference shares can also be called preferred stock. They're like shares of a company stock now, where you collect dividend, you buy shares from a company. They issue option to buy their shares. So once you buy their shares, is a source of finance for them. It's a long-term source of finance for them. You give them money, you buy their shares, they pay you dividend. So it's a long-term source of finance. There are types of preference shares. We have cumulative preference shares. We have non-cumulative preference shares. We have convertible preference shares. We have non-convertible preference shares. When you do cost of capital, you speak about preference shares very well, very, very well. So equity is, we all know what equity is now. I bring my capital, you bring your capital, we start company. When that is just the short term, no big grammar. Drop your capital, I drop my capital. Equity financed is the money of the owner that you're using to finance the activities of the company, the capital, share capital. So that is what equity finance means. We have sources of raising equity finance, probably from retained earnings, rights issues, or new issues of shares. So I can confidently say that we have finished sources of finance. But please, let's all still go back. Yeah, it's theory. It's theory. You're supposed to. So let's. But I've given you all the. So like I said, okay, I said I was going to dictate it or dictate everything again, everything I said. So in case you want to jot now, you can jot. So I said we have 3 sources of finance. We have short-term sources of finance. We have medium-term sources of finance, and we have long-term sources of finance. So I will list them, so you can go and make whatever. Because I think in this your pack, why I'm saying this, why I want to mention them again. I think in this your pack, you just have like 2 examples or 3 examples. So it will give you a wide gap. So for the short-term sources of finance, we have accruals. I have alpha, sorry. We have accruals. We have trade credit, also called trade payables. We have bank credit, also known as overdraft. We have debt factoring. I explained that debt factoring. We have commercial papers. We have bill discounting. We have invoice discounting. I think that's about 7. Please, is that fine? Can I continue?
Yes, I'll continue without you.
So that is for the short-term sources of finance. For everybody that wrote it
Please
down.
help us take them again.
Accruals, trade credit, which is also referred to as trade payables, bank credit, which is also referred to as overdraft, debt factoring, commercial papers, bill discounting, and invoice discounting. I think that's 7. Those are the 7 I mentioned.
Is operating leases part of it?
No, that one is short-term finance. I mean medium-term finance.
I've written it.
Cancel it to madam. Before you say it's one Mr. Shile that said it's part of it, please cancel it. So for
Sorry,
medium,
Mr. Shile.
yes, sir.
What's the difference between debt factoring and invoice discount?
Between?
You said debt factoring and invoice discounting. Is it not the same, or they are different?
You cannot say they are the same, because they are not like the same. Debt factoring, I explained debt factoring. Debt factoring like involves like a factor. You are just selling, you need a factor to do debt factoring. But for bill discounting or invoice discounting, you don't necessarily need a factor. You are selling your bill or invoice like a financial institution you can say it at a discount. But like you don't necessarily need a particular factor. But this one, you're just selling for invoice or bill discounting, you're selling it to financial institutions, so all over these guys. So you cannot say they are particularly the same thing, but they are very close. Very good, sir.
It's fine.
Yes, sir. So sources of medium-term financing. I spoke about leasing. I spoke about, I mentioned leasing. Man, this is where we have operating and finance lease, it's not that one. So leasing, we have sales and lease back. We have hire purchase. We have franchising. And we have venture capital. I think that's 5. That is okay. Then for long term, I mentioned debt. I mentioned.
Sorry, Mr. Lanshile.
Yes, sir.
You said franchising.
Yes,
By
sir.
literally, when we say franchising, I think it's a right like given to a company in another maybe geographical location to use the name of another entity that exists in another geographical location. So I pay for me to utilize that particular name or something. So how does it come as a source of finance? Because I believe that when you say source of finance, where
Pay now.
companies can get money.
Collect license, won't you pay?
That's what I'm saying. Like the entity we are talking now, they are sourcing for money. If they are getting,
if I own a company in South Africa and someone comes to me that okay, I can go to Nigeria and I will sell for you. I just need your name to go and sell there. They will come and buy it. Okay, this is the amount for initial pay this amount. Then for every amount I'll be collecting a particular percentage on it. It's a source of finance for me. Me that I'm in South Africa, I'm collecting money from you. It's a source of finance for me. Did I answer your question or I did not?
Yes, yeah.
Thank you, sir. So, I think that's 5. And for long term, I mentioned debt, I mentioned equity and preference shares. So those are the 3 for long term debt. Don't think we'll be able to do Islamic finance. That one has some kind of words there that we need to be properly chartered to talk about them. So I think okay, by our next class after this, so what I will do in our next class is, I feel like there were a lot of rushes here in this our class, but I needed to finish that bond valuation. It was already taking
Sorry,
too long.
what about the medium term?
I already mentioned them. Leasing, sales and leaseback, hire purchase, franchising, venture capital.
Okay, that's a medium term.
Yes, that's a medium term.
I thought lease finance is under long term.
No, ma, they're under medium term.
Okay.
Yes, ma. So what I would do is, I feel like there were a lot of rushes in this our class for today. I'm very sorry. Utman, please, I'm coming. Thank you very much for listening. Thank you. I'm coming. I feel like there were a lot of rushes in our class today, but I'm still sure that I tried my best as much as possible to make us understand. So, but what I would do is, I think after sources of finance, I think the only thing I have is, okay, I have option and I have portfolio theory. So, but I don't think you guys would have finished cost of capital by Wednesday. So by Monday, I would not have started portfolio theory. This is the particular reason why I rushed sources of finance today. So by that Monday, for the first like 1 hour or 1 hour 30 minutes, we can do a longer recap of what we did today. And by then, you guys would have solved question, would have tried. So the parts that you don't understand will come here again and we'll discuss it. So I don't think I'll be able to enter portfolio theory on that Monday too. Probably start option at the end of the day, because option does not involve cost of capital too much. So maybe I'll start option, but maybe the first 1 hour or 1 hour 30 minutes, we'll do a longer recap. So you can keep calm. If you don't understand, check it. You can message me, text me, ask if you could call me. If I'm available, you call me. We'll talk about anything you do not understand. I'm very sorry if it seems like I rushed the class. I'm very sorry, but we are working with a time frame, and we need to make sure we've covered the syllabus. And I still made sure I explained as much as I could, but I'm sure that the class would still. Please hold on. I'm sure the class too. All of us cannot assimilate the same way, so I'm sure some people still do not understand. So please, before our next class will most likely take option. But please, before our next class, please and please and please solve more questions on bond, bring them to the class, or you can send them to me ahead of time. If I have time, we'll discuss them. If I don't, bring them here on Monday next week, then we'll discuss them very well. And I will still do a longer recap of what we did. Probably bring a question, your question that has everything, that has current price, that has yield, and that has duration. Then we'll just take that one and never to come back to bond until revision time again. So please, let's solve questions. The parts we don't understand, let's bring them here and we'll discuss them. So if you're angry at me that I rushed the class, I'm very sorry. But I had to. I'm very, very sorry. And thank you very much. So Mr. Otman, you wanted to say something?
Yeah, thank you very much. The class was really enjoyable, and for all the ups and downs, really appreciate you, sir. Um, I want to suggest that at the beginning of the class, if you don't mind, maybe the objective of the day should be kind of maybe a list of the objectives we want to achieve for a lecture. Maybe that will give majority of us a sense of urgency of what we want to achieve, and how put a timeline on how fast we can achieve that. So I think that will reduce the number of
interference.
Interference, exactly. Thank you very much.
Yes.
It will reduce it, because once we've not really achieved anything, people will become that at the end of the lecture, maybe 15 minutes, let everybody ask his or her question. So that's just my own
What
perspective.
I even wanted to suggest, sir, is there no way you can mute everybody, just like what this other guy suggested? You mute everybody for a specific.
I'm coming.
You mute everybody for a specific period of time, such that you can open that window. No, not this temporary muting. There's a way he will mute it from his side. Everybody will be muted for real until he decides to unmute it from his end. Then even if it is 10, 5, or 15 minutes, you can unmute it for people to share their views and all that. Then when you want to mute it so that everything you are teaching will have no choice than to listen to you. Then if you have any objection, whatever, note it down. That window of 15, 10 minutes, then everybody can now air their view. I was in a class of a case study. That's what the guy do. He will mute everybody anytime you want to take any sensitive topic until he's ready for you to talk to him. And indeed, almost everybody got this thing.
Thank you.
Subject, yes.
Thank you very much. I always mute, but I don't know, my own way of teaching, I always like to carry. I always like, because this is calculation. I always like to know if you are getting it or you are not getting it. It's not like I'll finish.
Okay. But we are abusing it. The interference is just too much.
I was making sure that I mute most people that are, if you finish talking like that, I will mute you immediately. Exactly. I was doing that religiously throughout the class.
So, sir, please, I understand where everybody's coming from. There will definitely be improvements from now. I would try as much as possible to still carry everybody along and still keep the class in check. But it's always.
I want to bring your notice, sir, that we have some people that are writing SFM for their third time. So they have already mastered most of the things. We have people that they are just doing it for the first time.
Okay.
So that is my observation about some people's actions during the class. They are doing it the third time or fourth time.
That's not a problem. All of us we are still all learning it together. But I understand where you're coming from, so I would slow down a little bit, because with the figures and all, no problem. I definitely understand where you're coming from. So what I would just say is we all to make this work, the fact that is a free class or is not a free class. I always sit down outside. Mosquito will chop the life out of my body. But we are all just trying to make impact. That is the thing. If you pass, if all of us turn accountant, that is my joy. So we all have work to do. So don't just say one Mr. Shile should do everything. So we all have work to do. If you are not talking, mute your mic. If you are not understanding, raise up your hand. If you want to say something, raise up your hand. Don't just interfere the class and just
Add into
disrupt
the
our
class
class.
anyhow.
Don't just disrupt our class anyhow. Raise up your hand or make signals and all. So but I feel like the class is gradually growing because before we did not display in our first class. Second class we
Yes,
did
yes,
recording.
yes. Yeah.
I feel like we are
I
gradually going there. So thank you very much
When is our
for
next class, sir?
sorry.
I think you
Sorry,
have a second
man that
Wednesday.
was talking the other time about that. I've not been getting any information about that too. Sorry.
Information about
The case of the man was saying the case study lecturer was muting or something. So I was surprised because I thought case studies lecturers not
you thought what?
like.
Yeah, the man said the first respondent said he was in a case study class, that the tutor muted everybody until he wants to allow people to talk. So
Like as case study
he's
started.
now asking as case study class started,